And I think that there's a lot of cash that's sitting on the sidelines right now. I think that there's a lot of projects that are being held off. And I think what they're afraid of is as soon as they show signals of cutting interest rates, all of a sudden there's going to be an outpouring of money and it's going to hit the economy. And that's what they're afraid of. That's the reason that you're trying to be so delicate. But whether or not they're going to actually drive us into a recession first, that's the thing that I think is scarier, because every time they raise the rates, remember that the feds might be the catalyst. They might trigger the recession, but it's you and I, it's human beings, it's corporations that actually proceed on with that recession.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to watching the Financial Survival Network. I'm your host, Kerry Lutz. Well, rate hikes, are they here to stay, or will the Fed pivot? There are two schools of thought on the topic. Maybe there's three. There's one in the middle. Thinks they'll do both. Those are the people that don't want to take a position on anything. But hey, you got an opinion on it. I want to hear from you. They're going to raise to infinity. Are they going to cut to zero again? I want to know what you think. Send me an email, kl@kerrylutz.com. And Matthew Johnson is with us here to discuss this very topic. Matthew, welcome back. So do we keep seeing rate increases in spite of the world economy imploding?
Well, boy, I tell you what, it's a giant game of cat and mouse, isn't it, Kerry? Thanks so much for having me back. It's so very confusing to the average person, because right now we are just involved in this proverbial gray, vague type of verbiage that they're using, where they're trying to, not give any signal to the market that would justify them saying, oh, they're using a very dovish tone. So they're wanting to kind of give us this very gray speak to allow us to think, well, they're probably going to pause, but then again, we really don't know. They might do it in the future. And right now, the only real certainty that we have is, well, we just don't know until they have the meeting, and then they come on and they tell us what their decision is.
But at some point, don't they absolutely have to cut rates?
Oh, well, I most definitely agree. When you consider the national debt, you consider what has happened to the economy and the shrinkage of the economy. There is also the dynamic where, Kerry, I think you would agree, and many of your listeners would agree, our country, corporations in our country, just normal everyday citizens of this country have grown very much accustomed to low interest rates. And low interest rates, let's face it, that stimulates growth, right? People buy cars, people build their homes, people do all sorts of things when interest rates are low. Corporations do the exact same thing. And right now we're seeing many corporations that are sitting on the sidelines. They're not borrowing money. They're not doing new issues because, let's face it, interest rates are too high. And if we sit on the sidelines long enough, number one, that is going to definitely further the inflation coming down. But we know that in the future, the feds are going to have to relent. They're going to have to start bringing interest rates back down to get this economy moving again.
All right. So it's kind of a game of chicken here, but at some point they've got to do it. And the damage from these higher rates, bring down inflation, but at the cost of what? Are rates really going to bring inflation down, or is it the induced recession that's going to cause that?
Yeah, in many respects, I think that there's a lot of theories out there that their goal is indeed to create a mild recession at the very least. I just think of the malarkey that we heard 18, 19 months ago from the Federal Reserve saying that they were, very optimistic that they were going to be able to do a soft landing, that they were going to, quote unquote, thread the needle, all of these various things. And yet we see that they just seemed absolutely adamant to continue pounding the nails into the coffin. And I think that in all honesty, where I believe that they should have not raised interest rates back in July like they did, They did it anyway, and now I think that they're feeling some backlash. But I think it goes further than that. When inflation really became obviously out of control, and we put that in air quotes because you and I both know inflation, what real inflation was back in the 80s and 90s. But when inflation really became the number one headline, that's when all of a sudden the Federal Reserve became the whipping boy for not acting soon enough. And now I think that they're taking this tenure where they want to keep policy extremely tight because no matter what, they don't want to be blamed for having another repeat of the 1970s. They don't want to stop too early and then all of a sudden have inflation resurge. That would be just a disaster for them. So I think that that's the reason that they're taking the tenor that they are.
All right. So at what point does this thing end, though? I mean, I know you said when it's done, but how will you know? How can you tell that they're actually going to pivot?
Well, when they're going to start cutting interest rates, my best guess, and I'm not a fortune teller, I'm not Carmack off from Johnny Carson, but
you're not?
No, not at all. I don't have that ability.
Your turban. I thought turban in your office there.
That and the index card, right?
Yeah.
My best guess is that early on in the year, I was thinking, okay, well, maybe there's a possibility by the end of the first quarter, 2024, we're going to start to see the pivot. And now I believe that all they're doing is kicking the can down the road. They're furthering that time in which they can pivot and start cutting interest rates closer to the end of the second quarter of 2024. And I think that there's a lot of cash that's sitting on the sidelines right now. I think that there's a lot of projects that are being held off. And I think what they're afraid of is as soon as they show signals of cutting interest rates, all of a sudden there's going to be an outpouring of money and it's going to hit the economy. And that's what they're afraid of. That's the reason that you're trying to be so delicate. But whether or not they're going to actually drive us into a recession first, that's the thing that I think is scarier, because every time they raise the rates, remember that the feds might be the catalyst. They might trigger the recession, but it's you and I, it's human beings, it's corporations that actually proceed on with that recession. We start to tighten up, just clam up, and all of a sudden, that's what creates that knee-jerk reaction that we're all so afraid of.
All right. Well, I guess we'll know it's happening when it happens. And then we'll be playing that good old song from the 30s, Happy Days Are Here Again, right?
Let's hope, huh?
Yeah, will. But, every recession sets the stage for the next expansion, and every expansion sets the stage for the next contraction or recession. It's kind of like peace leads to war leads to peace. But there are always telltale signals that they give out to the big boys, right? Because that's why they exist, to guarantee the sanctity of the banking system.
Mm-hmm. Agreed.
All right.
Absolutely.
So the next question, is the banking crisis over, or every time they raise rates, it goes up another notch?
I think that that's a really worthwhile question, Kerry. I'm not comfortable with saying that we're out of the woods yet. I think that there's quite a bit of distress that still exists within the banking industry, and especially within some of the larger banks. I know that just recently, the Federal Reserve has gotten together with the banking sector and they've tried to calm the fears. But yet we know that every single time rates go up, it creates greater distress and pressure on the banking system. And so is this something where we have to be alarmed when we see a few banks fail? I don't believe so, because historically, when we go back from, say, 2008 until now, and we look at the average number of banks across the United States that have failed, it's actually pretty alarming when you see the average number. But we know that the number has gotten smaller and smaller. But now these banks are dealing with manipulation, right? They're dealing with the government manipulating the monetary system, raising the interest rates. That means that they're losing money on the bonds. We know that there is a tremendous number of institutional investors, as well as just average Joes, that are walking in. They're pulling their money out of one institution and moving it across the street to another institution that's going to give them, 10 basis points more for interest. And so this is creating quite a bit of distress. So we want to be extremely careful to not only manage how much money we have in the banks, but we want to make certain that we're doing our due diligence in the bank that we actually have our money in. Are they small and private, or are they part of a conglomerate? Is there, any opportunity of research that we can look and see how distressed they may be, or what percentage of their book of assets is distressed? These are important things that we have to take responsibility for, I believe.
Yeah, but the financial statements of these mega banks, gigabanks, terabanks are so opaque that I challenge anyone, even if you have an advanced degree in auditing, to be able to understand what's in there, because you don't know. And then you got all these single-purpose vehicles, SPVs, that they created to avoid all the regulation. Banks are masters at obfuscation and deception. So you really can't know whether your bank is solvent or not, can you?
It is very, very challenging today to be able to know exactly where things are. We know that banks have very clever ways of being able to hide distressed instruments and distressed assets. We know most every corporation has very unique and very clever ways of being able to hide distressed instruments and assets. Nevertheless, I still believe that it's our responsibility to do our due diligence, to make certain that we have our money diversified. One of the things that human beings, I think, are very susceptible to, Kerry, and I know you believe in diversification as a fiduciary, I do as well, is we have to be diversified with our money. We cannot find one single source of instrumentation for ourselves and say, this is it. This is the perfect one. We can look and observe gold, for instance, and gold is down slightly over the last 6 months. And yet we look at something like a commodity like crude oil, and it's up 35% in the last 6 months. Well, someone could argue, well, oil is the best investment that there is out there. And yet you can go back and you can see where oil was decimated in 2020, right? Mm-hmm. So this is where we want to make certain we don't have too much of our money in the bank. We don't have too much of our money in any one particular area, but rather we are diversified, not only by name, but we are diversified by asset class as well. Mm-hmm. We do our diligence because no one's going to be here. The government's certainly not going to be here. We can't even believe half of the numbers that we receive, in my opinion.
Yeah. Only half? I mean, you're being an optimist here.
Well, I don't want to be a Debbie Downer, right? But we have to do our own due diligence and make certain that we have that money diversified and we've looked at where we're putting our money and we personally feel comfortable. Don't take a person's word for it and say, yeah, we're safe, because we've been down that road. We've either got personal experiences or we've got our friends that have had that experience and we don't want to replicate that.
Yeah. Hey, just look what's happening in China now. If Chinese read American history, they would have been prepared for all this. We forget, going back, that how many millions of people lost their life savings entrusted to the banking sector. And I know, like, my grandparents' generation didn't trust banks for the rest of their lives. And even my parents had issues, but they managed to put them aside. The, winds of time kind of wear everything down. But, I guess some government guarantee is better than no guarantee at all. And push comes to shove, they will print money to stop a banking sector collapse. They're doing it right now with the emergency facility at the discount window to keep all these mid-sized banks afloat, right?
Mm-hmm. Agreed. We have never had a problem in the last 2 decades of taking and financially manipulating what we need to in the monetary system to keep things looking good. And that's part of the reason that so many people today have distrust for the government. They have distrust in the banking sector. They have distrust in the stock market. And in many respects, I want to just kind of speak of this. There's many places that we can deposit money and we can feel relative safety in doing so. We want to remember that the bank is simply one place. Now, granted, it may be the most popular and the most common but there's many places that we can put money that is relatively safe. Are these things going to be absolutely 100% insured? And the answer is, I don't care if you look at insurance companies. I don't care if you look at U.S. Treasuries or insured municipals. All of those things are going to have good times. They're going to have bad times. But diversification is the call of the day for today.
Okay, so we will leave it at that. Diversify or die, potentially. I mean, you have to do it because they've left you no other choice. Anyway, Matthew, just tell us best place to find you these days.
Absolutely. You can go to our website, johnsonwim.com, stands for Wealth Income Management. They can also tune into my radio show. They can go to my YouTube channel, The Capitalized Life. All sorts of webinars every single month to educate people on things that are financially relevant to them. I appreciate all of the feedback from your listeners. It's always so very gratifying.
Hey, well, thank you for that, and we appreciate it as well. Hey, if you got a question for Matthew, myself, kl@kerrylutz.com, please send your emails. Let us know how you are maximizing your cash flow. Are you putting safety or perceived safety above all other factors in your decision where to put your money? I'd like to know, kl@kerrylutz.com, and you'll find a link to Matthew's site at financialsurvivalnetwork.com in the show notes to this interview. While you're there, sign up for a free newsletter. Matthew, thanks for coming by. Always a pleasure.
Thanks for having me, Kerry.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.